Today is the 17th of April 2021. My name is David Hickson, and in today's market update we're going to be speaking about FLD patterns. Before we do that, I must ask you to please make sure that you have read and understood these disclaimers. We're going to be looking today at the S&P 500. This is the analysis we've been tracking over many months now, with a 54-month cycle trough in March of 2020. Might have been a longer cycle trough, perhaps a 9-year cycle trough, and then a 40-week cycle trough over here at the end of October last year, and here is the 20-week cycle trough at the beginning of March. Of course, the next thing that we are expecting is that price is heading up towards a peak of the 18-month cycle, after which time it needs to come down into the 18-month cycle trough, which is expected a little after the middle of this year. Let's zoom in and take a look at the 20-day cycle FLD. The FLD is, of course, an acronym defined by Hurst, and it stands for Future Line of Demarcation. It's a very simple line that you can plot on your chart. It is simply the median price displaced to the right, in other words, into the future, by half of the cycle wavelength upon which the FLD is based. An interesting thing has happened in the markets recently. That is that we have a 20-week cycle trough, according to this analysis, at the beginning of March, which would make this trough over here in the third week of March probably a 20-day cycle trough. But the question is, what has happened to this 40-day cycle trough? Here you can see the circle indicating the time. Let me just clear this chart. The circle indicating the time at which that 40-day cycle trough was expected. The whiskers, which are these lines to each side of that circle, indicate the reasonable amount of time in which that 40-day cycle trough could have been expected. And in a recent market update, I spoke about the possibility that this might be the 40-day cycle trough forming over here. It highlights an interesting aspect of analyzing the markets using Hurst cycles. At least I find it interesting. I know that some people find it frustrating. But the fact is that a Hurst cycles analysis is not an absolute science. Hurst himself said that a Hurst cycles analysis was more of an art than a science. And what we are trying to do is identify the positions of the cycle troughs and peaks as they form in the price movement. Now, there's an interesting disconnect there between the cycles that are influencing the prices and the actual prices themselves. I don't speak very much about it because it can get a little complicated and confusing, but the fact is that, of course, we identify troughs as they form in the price. However, the actual cycles that are influencing that price are probably forming troughs and peaks at a slightly different time. It is a combination of multiple cycles as well as many other influences, such as news events and the complicated noise that is caused by our human existence on this planet, which tends to distort our perception of value in something such as a stock market. The result is that the price movements that we see on our charts can sometimes be a little bit messy, and they are by no means a perfect mathematical representation of what is happening to the cycles that are influencing those prices. Now, the average length of a 40-day cycle is 34 days, and if you don't understand why that is, I would encourage you to download the 10 Core Concepts document that I will provide a link to in the description below this video. But a period of 21 days, and there you can see I'm counting the days from the beginning of March until that trough formed in the third week of March, is certainly very short. It's about 13 days short, considering the average length that we expect that 40-day cycle to be. However, it is interesting to notice that the whisker for the 40-day cycle trough actually does extend to include this trough that formed over here. And so the question is, was this in fact the 40-day cycle trough that formed in the markets? In my opinion, it probably was, because there have now been, and let me just move this bar count slightly, there have now been 43 days since the trough at the beginning of March, which, if price was to come down and form a trough at this point, would make that a very long 40-day cycle. It's very important to bear in mind the way in which cycles combine to influence prices. And an important point to notice is that when a market is bullish, or what we call the underlying trend of a market, which is the combination of all cycles longer than the one being considered, when the underlying trend is bullish, peaks tend to occur late and troughs tend to occur early. Now, has this been a bullish market? Well, if we zoom out, I think it is fairly obvious that we have been in a bullish market, and the reason for that is simply because of the very big magnitude trough that formed early last year. And so in a bullish market, we expect troughs to occur early. And so in my opinion, this is probably a 40-day cycle trough that formed over here. Now, what about the interaction between the 20-day FLD and price? If this was a 40-day cycle trough, we would expect price to cross down below the FLD and to achieve a target to the downside. Now, it was a very messy cross, as you can see, but I think we could estimate the level at which it crossed as about over there, indicating that in fact price did come down and achieve its target to the downside, meaning that this could qualify as a 40-day cycle trough. When there is some confusion about the magnitude of a trough that is formed in the markets, I find it very interesting to take a look at other markets. Let's quickly jump across the oceans and take a look at the DAX. Here is the analysis of the DAX, and I would like to point out an interesting feature about this, which is that the 20-week cycle trough in the DAX occurred about a week earlier than it did in the US markets. If we measure the number of days from the 20-week cycle trough in the last week of February up to the 40-day cycle trough, you can see that 27 days elapsed, which makes it a short 40-day cycle, but not unacceptably short. And of course, as mentioned, in a bullish market, we do expect the troughs to occur early. Hurst defined something called the principle of commonality, which is that cycles tend to influence markets around the world in very much the same way. They have a lot in common. And so you will sometimes see this kind of thing happening in the markets where a 20-week cycle trough occurs about a week later in one market and a week earlier in another one. Again, it is a reminder that these cycles are no means an absolute science. Let's go back to the S&P 500. You will know that I often speak about interaction between price and the FLD, and I usually select a single FLD for that discussion. There is, of course, an FLD for each and every cycle that we have in the analysis, and I can display a whole bunch of those FLDs. There we go. There is a whole collection of FLDs from the 5-day cycle all the way up to the 40-week cycle. Why am I showing those now? Because price, of course, doesn't interact with a single FLD. It interacts with each and every one of these FLDs. And Hurst himself discussed what he called multiple FLD patterns. And what is developing in the markets at the moment is a particular pattern that he discussed called the cascade pattern, where these FLD lines are all running parallel with one another, as opposed to being all jumbled up. If we take a look at the left-hand edge of this chart, this sort of period over here, you can see we have a lot of FLDs that are very jumbled up and mixed up. They're crossing each other and going back and forth, all the way from over here, all the way up to about over there. That's a different kind of pattern that we're not going to discuss now. But over the next few weeks, you can see that we have a very different kind of pattern forming between these FLDs, and that is a cascade pattern. What is the meaning of a cascade pattern? Well, this is where things get interesting. As you know from previous market update videos, we are enjoying the fact that the markets are heading up towards a peak. They are expected to form a peak sometime within about the next month, after which time the markets need to come down and head towards that 18-month cycle trough. What happens when they do? Well, the first thing that will happen in terms of interaction between price and the FLD is that price will cross the 5-day FLD. So let's zoom in here and speak completely hypothetically. Please bear in mind this is hypothetical because we need to assume that markets are going to turn down and cross the 5-day FLD. Let's assume that we do not get another high, and I'm by no means suggesting that we are not going to see further high prices. I think we probably will, But if price turns down at this point and crosses below the 5-day FLD, somewhere over here, then we would generate a target. The way that we generate a target for the move down is we measure from the peak down to the crossing point and we extend an equal distance below that. If price on its way towards achieving that target crosses another FLD, which indeed it would, because it would then cross the 10-day FLD, then we are able to generate yet another target down over here. And if in the process of achieving that target, as a result of crossing the 10-day FLD, it crosses yet another FLD, which it probably would in terms of crossing the 20-day FLD over here, then we are able to generate yet another target. And we continue this process. Do you see that in order to achieve the target which we generate as a result of crossing the 20-day FLD, price would also cross the 40-day FLD, and we would generate yet another target. At some point, however, we reach a gap in the sequence, or a gap in the cascade pattern. So you can see that all of these FLDs generate targets which are beyond the next FLD in the sequence. If price, and that is again a hypothetical suggestion, if price crosses the 40-day FLD at this point over here, then we would project a target, and price would achieve that target before crossing the 80-day FLD. At that point, price has achieved the targets that were generated by each of the FLDs that it has crossed, but it would then pause on its downward journey towards the 18-month cycle trough because it has entered into this gap area over here. Now, of course, this is all entirely hypothetical because we will probably find prices heading up even higher, and so it is impossible for us to project the implications of these multiple FLD patterns until price actually begins to cross the FLDs. Only once it begins to cross the FLDs can we actually generate the targets and work out where those pause zones are going to occur. However, it makes for a fascinating hypothetical exercise to take a look at where each and every one of these FLDs is and to calculate where price would end up if price was to turn around and form that peak now or in the near future. Fortunately, we don't have to do all of that manually because Sentient Trader has a feature built into it which is called the FLD pattern projection. Let me zoom out a little bit and let's take a look at the pattern projection for the 80-day cycle. Let me actually turn off these FLDs for now just to make this a little clearer, and I'll show you what is happening here. Here is the upwards FLD pattern projection for the 80-day cycle. What the software has done is, based from the most recent 80-day cycle trough, it is taking a look at every FLD and also actually the VTLs that are in there, but that's a separate subject, and it is working out what projections it can calculate to the upside as price crosses each one of those FLDs. This is the projection. It is a box, as you can see. The ideal target is right in the middle of that box, but the lowest or minimum expected target is down here at the bottom of the box. The range of time is of course defined by the left and right hand edges of those boxes. If I move my mouse down to this lower box over here, then you can see we get these lines over here. Whoops, those lines over there indicate that this is the second leg of the projected price path, and this is calculated on the assumption that price does turn around from within this box at the top here, and as it crosses each one of the FLDs, let's display them again very quickly, as it crosses each one of those FLDs, it is projecting a path downwards into the next 80-day cycle trough, which is of course expected, according to this nest of lows over here, in about early May. Now, I could spend a long time speaking about these FLD pattern projection boxes. I don't want to do that because I'm trying to keep these videos nice and short, but let me show you some other pattern projection boxes and show you how this works. If we take a look at some of the shorter cycles, and perhaps we should zoom in here, you can see how the different cycles tend to create these stacks of boxes on top of each other. These are the projections for each one of these different cycles according to the multiple FLDs that are present on the chart. And so you can see that our peak is projected round about there for the 20-day cycle, round about there for the 40-day cycle, and that 80-day cycle is a little bit hidden, but it's round about there as well. The 20-day and 40-day pattern projection boxes don't have a downward projection yet because price is still clearly moving up and the software is not able to calculate where the downward projection would be because there's simply not enough information. Now let's zoom out and add a longer cycle pattern projection box. Here is the 20-week cycle pattern projection box. And here you can see we are projecting downwards to the position where we are expecting the next 20-week cycle trough, which will of course be synchronous with the 18-month cycle trough I have been speaking about, which is expected around about the middle of this year. You'll notice that the origin lines, these dotted lines that appear when I move the mouse over that pattern projection box, are actually starting right over here at the most recent high price. That is because according to the multiple FLDs that are on this chart, the recent high price, which was yesterday on Friday, qualifies as being a possible peak. In other words, we have no further upward projection for the 20-week cycle. Price has fulfilled all the upward projections for the 20-week cycle, and we are next expecting it to move down into this 20-week cycle trough. Let's add the 40-week cycle projection. There it is, sitting behind the 20-week cycle projection. It's a little lower, as you can see, and it considers the recent peak as being a possible candidate for that cycle peak. Finally, let's add the 18-month cycle pattern projection, and this shows us something very interesting. I've said several times in recent market updates that the fact that we are expecting price to move into an 18-month cycle trough is not necessarily a very bearish thing to expect. What I'm going to do here is zoom out and show you these pattern projections within the context of the bigger picture. Here you can see is the yellow box for the 18-month cycle pattern projection. And in fact, it is not indicating a very big dramatic fall. Sometimes when I say that we're expecting an 18-month cycle trough, people think that must be a very big move downwards. It is not necessarily a very big move downwards because of the fact that we have such a big magnitude trough that formed last year. And so we are certainly expecting price to come down. And let me see if I can highlight those origin lines. There we go. Price is certainly expected to come down fairly soon. I discussed last week when we are expecting that peak to form, and it is going to come down, but not necessarily very far into the 18-month cycle trough. I do hope that you found this market update interesting. If you have any questions, please put them in the comments below the video. I look forward to hearing from you.